Stuart Haber co-invented the blockchain, is the most cited scientist in Satoshi Nakamoto's Bitcoin white paper, and today serves as Chief Cryptographic Officer of SureMark Digital, building cryptographic identity verification for institutional finance. And today we're here at Proof of Talk in France, and we are talking to Stuart Haber today. Thank you very much for taking the time. It's a pleasure to speak to you. So, when you invented blockchain, you did it to prove when a document was created, not to move money. That was not the idea back then.
That's correct.
Now, blockchain is becoming the backbone of multi-trillion-dollar asset industry.
Yes.
Does the system being built today reflect your original ideas?
So, the original, maybe you might call it proto-blockchain that I designed with Scott Stornetta, my partner in crime, and this was some decades ago. We were trying to solve the problem of ensuring the integrity of digital records. When we set our minds to this problem, it was fall of 1989, and it was clear that the world was going online. As I like to put it, we were not all carrying around supercomputers in our pockets the way we all are now, though not everybody walking around with one of these realizes what
it can do.
What an amazing device it is compared to what something this size was able to do 40 years ago. But in any case, it was clear the world was moving online, and we were worried about the integrity of digital records. All to get to wax a little grandiose about it. We were worried about all of the world's records. We were not trying to invent electronic money, purely electronic money. There was already at that time a stream of research in the cryptographic world with that aim. But we were when we came up with a solution, now known as the blockchain technique, we had our applications included financial records, of course, business records, creative products, everything. And but we were and we tried to make a business of it. We were selling registration of digital records to customers. Seeing what an amazing industry this has turned into since Satoshi designed and launched a Bitcoin has been an amazing thing to watch.
Your whole argument in 1991, when you actually launched your first blockchain, was stop relying on institutions and rely on math. If we encapsulate it into...
So we wanted to enable verification of integrity of records, relying on as few parties, as few entities, as few people, as few social entities, as little as few software agents, as few hardware agents as possible, and as few mathematical assumptions about computational difficulty as possible.
But the biggest blockchain deployments today are run by like institutions like BlackRock, JP Morgan, even the European Central Bank. So are we just rebuilding the same trust hierarchy on a new stack?
Bitcoin is still a pretty large sum of money
That is true.
represented, and Bitcoin is not run by a single institution.
Yes, but on the other hand, everything that is related to tokenization, which in the end also relies on blockchain, it's very centralized, and it's those big institutions that are running our banking system that
Yes.
are getting more and more involved into the blockchain space
Yes.
as well.
So we'll see what happens.
Yeah, okay.
I think neither Scott nor I, had predictions in mind of exactly how adoption of our technique would be would roll out. I
Yes.
mean, we had high hopes, ambitious hopes, especially for the young kids, young researchers that we were. But I at least certainly didn't foresee the way history played out.
Yeah. AI deepfakes just cost the company about $25 million in a single wire transfer. SureMark is your answer to that, but as AI gets better, does the attack surface grow faster than you can actually solve the technology?
So just to expand, for those who don't know the story, this was just a few months ago, late fall, a particular company, a mid-level employee who got an apparent order from a senior executive at his company, I believe in Hong Kong. I'm not sure. And was appropriately suspicious of this order to send a total sum of about $25 million US to an account, or maybe several accounts somewhere, and made sure to get proper authority. And there was a Zoom call arranged with several executives in the company. And as it turned out, every single one of the handful of people this poor employee was talking to were deepfakes. So you asked about techniques getting better and better.
Yes.
For manufacturing these deepfakes. So at SureMark, we are, as we like to say, we make deepfakes irrelevant by sidestepping the problem. So we offer a system where, for example, the executives of a company, several executives in the company, and people outside the company whose orders or whose messages could have significant impact on the company. Maybe their outside counsel, maybe an auditor, maybe if the company makes physical objects, people involved in their supply chain, and so on. Each of these people has what we call a SureMark credential, which in cryptographic terms is a public key from a public key private key pair for a digital signature, and we make sure that our customer companies incorporate as part of their standard operating procedure that any decisions or any messages about decisions or orders are backed up by a real-time challenge and response, so that in the case of this employee in the firm in Hong Kong, he if that firm were a SureMark customer, would have challenged the one or more of the officers in charge, and the impersonator, who was or team of impersonators, I don't remember the case, but would not have been able to meet those challenges.
Yeah.
And the scam would have been avoided.
So, yes, this would have been avoided, but is cryptography the ultimate defense against such deepfakes?
The ultimate? No, but there's still. We reduced in fact reduced the attack surface considerably. Because as part of the standard procedure, one reaches out and makes sure that orders are come from the person with the right authority.
Yeah. In a tokenized world, every asset transfer is only as trustworthy as the identity behind it. Is identity verification the missing layer in financial tokenization? If so, why hasn't the industry solved it yet? Or did we solve it?
It's part of it, but we are providing verification of people's digital social identity, where we are not, for example, providing signatures for Bitcoin wallets or wallets for used for tokenized versions of assets on other blockchains, where we're not directly addressing that problem. But why hasn't the industry solved it?
But should it be addressed? That is the question. Like,
on
the one hand, it says it's your key, it's your wallet, so you are the one that is authorized to do the transactions. But still, there might be situations where you cannot be sure that the person who authorizes the transaction is actually the person they are pretending to be.
So that depends on the larger engineered system that we're part of.
Yeah. Satoshi cited your work 3 times in his white paper, approximately.
His, her, there.
Yeah, but he or she narrowed the use case to currency only. Now, 30 years on, do you think that narrowing down this use case to just currency was it a mistake, or was it the right step to force adoption of the technology?
Well, Satoshi Satoshi, when putting together a peer-to-peer electronic payment system, Did I get the title right? I think so.
Yeah.
Or pretty close. When putting together the peer-to-peer electronic payment system that is Bitcoin, needed, among other things, a tool for ensuring the integrity of data of certain classes of bit strings, namely the ones encoding transactions in the financial system. The Satoshi, apparently knew quite a bit of the cryptographic literature and the techniques around, and that in whatever the year 2008, when Satoshi was designing this system, that was the best solution around, and chose it, and was able to combine it with the mining game that it achieves consensus for the blocks of transactions in Bitcoin, which was a marvelous technical achievement. The mining game, or the proof of work technique for ensuring that a digital identity is backed up by something. Was also not Satoshi's invention, but Satoshi put it together.
Yeah.
And you mentioned that Satoshi had the good graces to give Scott and me appropriate, academic citations in the bibliography. I should say Scott and me and our co-author Dave Byer on one of our papers. Satoshi did not give references to, in fact, to the problem of achieving consensus, the basic distributed computing problem, what computer scientists at that time, and still sometimes call the Byzantine generals problem, Byzantine computing problem. Even though Satoshi made a big contribution to that field, we now, academics call it the Nakamoto consensus mechanism. In fact, Satoshi didn't give any references to that literature at all in the white paper.
Interesting.
So his citations were hit or miss, but I'm glad.
Well, I didn't publish it as a scientific paper back then, so it's not in the traditional sense.
Yeah, but the references to our work were certainly in the traditional manner.
Yeah.
So, but missed a few.
There's a lot of talk about regulatory frameworks like MiCA and the new frameworks that are being developed in the US. They're starting to require verifiable audit trails and identity attestation for tokenized assets. Is regulation actually asking for the right things, or will firms just satisfy the letter of the law with a weak, centralized shortcut?
That depends on. I'm rather sure that there will be a selection of standards and a selection of regulations being rolled out, and some will be enforced more strictly than others, and there certainly will be people and companies and institutions trying to push the envelope and satisfy things as much as possible, but
from your point of view, do regulators have enough understanding and knowledge of like how you see identification, how it should be, and do they?
There are certain.
Are they able to implement it to an extent that that it is really safe to say that identity is verified in the right way?
It's certainly, given human nature, it's going to be very likely that there are people in positions of authority for writing regulations who don't know what they don't know. But there's a chance of things being done right. They will. We'll see what happens. It will be. It'll be a game. One thing. One way that Satoshi has changed computer science, in fact, is by explicitly bringing to the attention of computer scientists who worry about distributed computing, game theory and incentives. It's not as though the community was completely ignorant of such considerations, but Bitcoin certainly raised its visibility, and Bitcoin and its success also raised the visibility of Scott's and my work.
Yes,
no question about that. In 2008, 2007, there were a bunch of people in the cryptographic community who knew about our digital timestamping solution, but when there was suddenly a lot of money being made, and the people looking at how Bitcoin worked realized that the importance of the integrity mechanism, and realized that it could support more than Satoshi's specific design of Bitcoin.
And then going back to the question that I asked a bit earlier about was it the right decision on Satoshi's part to narrow the use case to the money or not? He certainly pushed the right button that seems to activate human response.
Satoshi, very likely, was not particularly interested in making our timestamping mechanism visible. Satoshi was interested in building a peer-to-peer payment system, and did a good job of it.
Yeah.
And look at this meeting here.
It's a development that is really, really fast, and is changing a lot of things about how finance is perceived in general in the mainstream also.
Right.
So SureMark promises frictionless integration with existing systems, but Swift and DTCC, they were built on counterparty trust, not cryptographic certainty.
Yes.
Can you bolt real trust onto this legacy infrastructure, or does tokenized finance eventually need a clean break from what we have now?
A clean break from human. We're still, you know, you and I are human beings having a conversation here. It's
about a clean break from the system. So the question is a full integration even possible to bring cryptography into the systems that we're using today?
I think that's possible. Yes, but it needs to be grounded in knowledge of if it's going to be used eventually by people and their systems, it needs to be grounded in social norms and regulations and laws and practices.
How do you see
in fact, when Scott and I were trying to come up with a scheme for ensuring the integrity of digital records, without trusting a single entity, and using cryptographic tools, it took us a while to come up with a solution. And in fact, after thinking about the problem for some months, I'm talking about, this is now 1989, 90, we did not have a solution, and we focused our efforts on trying to prove that, in fact, there was no way of designing a solution without having a trusted party. And it was by sort of stepping back and thinking of the social setting. What does it mean as a human assertion? This document existed in the world at this time. If the document is going to have some importance later, is a social question. So it was by thinking of the social question that we realized the importance of what in the blockchain world, the word people use all the time is decentralization, widespread verifiability.
But what you're doing now with SureMark is basically, as I imagine it, it's an enterprise solution. You're
Yes.
offering this to entities to identify, verify their own employees. But if we are thinking bigger picture here, when we're talking about tokenization, will I need 10 different cryptographic keys or certificates, whatever, to prove who I am? Or is the ultimate solution that in the future there should be only one such identification that is tied to me personally?
So first about SureMark, never mind the future. SureMark's current offerings include both the real-time response capability, so as to fight deepfakes of the sort that we were talking about a few minutes ago.
Yes.
But also we offer the same technology backing up what we call the verified web, so that, for example, this podcast, which you will publish online, you can, if you have a SureMark credential, you can sign in a way that anybody on the web who looks at it can check your signature.
Okay.
And when you broadcast, I will sign it, and in fact, invite you to co-sign it.
Yes.
And if you like that, that capability, you can use the SureMark credential that anybody will check for your co-signature on this interview later on your next podcast, your next interview, and invite them, the people you interview, to co-sign. And this strengthens all of our digital identities by adding the verifiability to each of these interviews and your online presence.
But that also would include then artists and like there's
Yes.
like creators in
Right.
general. So that's
So that we think, and I mean we have SureMark is a startup. We're just now getting going, and our flagship first partner is it's in fact a cybersecurity practice whose companies are onboarding this challenge and response capability,
Yes.
because the guys, insuring these companies against cyber attacks of all sorts, the insurers are saying this is a good tool, and they are encouraging their customers to use it. But they're banks are where the money is, as people used to say, and as even the most even the biggest Bitcoin maximalist, at this event will still maybe for some part of the day actually admit to banks are where the money is. We're starting there.
What's your comparison, like if we're talking about government issued IDs, for example, biometric verification versus cryptographic verification? Which one do you prefer?
So we're avoiding government IDs. In the case of a company, we are relying on whatever a particular company uses in the way of securing the identities of their employees. That's the backup for each individual employee of the company who's using our system.
I see.
But we're so if the
interacting.
Yes, but if to pick an example, if you were the lawyer who's an outside counsel for one of our customer companies, and you have a secure way, or there should be a secure way by which you talk to folks at the company.
Yes.
And that's how you that's how you onboard onto our system. But you might recommend the same scheme to another company that you advise as a counsel, and we manage your identity sensibly for
Yeah.
when you become part of the circle of a second and a third and so on company.
Thank you very much. It was a very interesting conversation. Thank you very much for your time and
My pleasure.
doing it so late at the end of the event.
Well, it's great.
Thanks again, and
Okay.
safe travels home.
Same to you.